All right. It's currently our government allows us to access 80% of what our home is worth once we own it. So make the numbers really, really easy. If you own a home, it's worth $100,000. That means we can tap into $80,000, which is 80%, minus your existing mortgage.
Okay. Hey everyone, welcome to an episode of the Ryan Report, and today we have Erin Hamilton with us from Sherwood Mortgage Group, and she's going to be talking to us about how to fix your credit, how to rebuild that credit, how to maintain the good credit, and also how to make the equity in your current house work for you. All right, Erin, so let's get started on some of the topics, and just before we get started, everyone, let's just make a quick disclaimer here. This isn't credit counseling. Always seek private, professional advice when anything doing with your own credit counseling. Erin's just here to give us a perspective view, how she deals with it on a daily basis from a mortgage lender standpoint. So the three topics we're going to talk today to Erin is what is considered strong credit. So we're going to look at different beacon scores and what that does for us. What are some tips for improving and strengthening my credit? And what advice would we give to someone that has maybe filed bankruptcy or gone through a proposal? And then the second thing we're going to talk about is what are some of the great ways to use your equity in your current house or current investment properties and how to make it work for you. Sound good?
Perfect.
Awesome. Okay. So let's get started here. So if someone that wants to, let's say, fix their credit or find out what their credit is, what's the first step?
First step, if you just are curious as to what is appearing on the credit bureau or currently reporting, there's a couple great apps out there that don't necessarily hurt you when you check, but they're also not necessarily fully regulated. So an app such as Credit Karma, it's fantastic for checking on history and what's reporting, but it's not necessarily a true beacon score.
Okay.
So please ignore the score, but watch for fraud. It's great for that. If something's reporting improperly, then you would go to the proper website of Equifax or TransUnion. There is a cost to pull your credit bureau, but it's definitely worth it at that time.
Okay. So the two main things that people report to the creditor is TransUnion or Equifax.
Correct.
Those are the be-all and set-all from Canadian banks and lending, but all those other great tools are a great, efficient way to monitor your credit, fraud alerts, stuff like that.
Correct.
Okay, cool. So what are some of the first steps you can do after you got your credit report? We'll just say it's absolutely horrible. What are the first steps you want to do to manage that credit report and start building it up a little bit?
Find out why it's horrible.
Okay.
So there is quite a few times where it's just not reporting properly.
Okay.
So the credit bureaus are not necessarily government regulated. They are creditor regulated. So if that particular month your creditor just didn't report, there's nothing harming them. You can't necessarily go back on them. So sometimes there are balances left showing, but you've already paid it off and that final payment hasn't been necessarily updated. Or a lot of the times if something does slide into collections, the collections agency doesn't report that it's either been settled or paid.
So it's really a two-way street. Like you can't just rely on the creditors and everyone to report it properly. You got to be checking up, doing your homework, and making sure that everything's done properly.
It's definitely recommended. Absolutely. It's more about the history. Ignore the score on those free apps.
And then how often would someone check that? Like how often would you recommend?
Creditors are supposed to report by the end of the month. And then normally the credit bureaus would update their history by about the 10th of the month. Okay. So if you are very concerned about changes being updated, then once a month, maybe. Okay. If you're not too concerned, maybe twice a year, once a year. Okay,
that's great. And then so like my bank has a free app now where I can just click on check my credit. Will that stuff show up on there then?
No, it's not. It doesn't go against you as a credit pull necessarily because you're not applying for credit. Okay. You're just looking for the history.
Gotcha.
Whereas if you are applying for a cell phone, a car, every time you have your credit bureau pulled, you are dinged some points.
Okay, so let's talk about, we've established bad credit. We have a bunch of payments. So what are some good habits to put in place then to make sure your credit history gets better? Improvement of your score.
The perfect client on paper a lender would love to see is you kind of follow what I call the rule of twos. Yeah. Lenders want to see at least 2 trades open at all times. Trades are credit cards, lines of credit, car loans, student loans. They all hit the credit bureau. They also want to see them open for at least 2 years to show your history of repayment. And they also like to see a limit of $2,000. So, those student visas that you start out with for $500, they're great, but you do need to graduate from that to show that you can be allotted, said credit and you use it appropriately.
So just to be clear, everyone, Erin's not saying out to go out and buy a bunch of stupid shit and go put a credit line for it to get your credit better. Still, we expect responsible lending and responsible purchasing practices, but having credit is good because it helps you rebuild it.
Absolutely. Yeah, I can't stress enough. It's showing that you can have credit available to you and you use it appropriately.
Okay. So what about payments, right? So some people think I got to pay the whole thing off. That's what gets my credit better every month. So what are some payment practices people can make when improving their credit? They got all the bills. They can't pay them off every month. What should they be doing? What steps?
The minimum payment at all times. That's the number one rule. There's no forgiveness if you make a partial payment or even if you're 3 cents short. There is no forgiveness. It's either the full minimum payment on time or it's late. Of course, it's great if you can pay the full balance off because then you're not paying interest.
Yeah.
But if you can't, at least the minimum payment, and do try to keep your balances under 75% utilized.
So just for anyone to recap on that, she's saying is if you owe $1,000 on your visa, but the minimal payment is $25, make sure you get that minimal payment on.
Absolutely.
And what's some tips to help people? Because some people are really good at doing that, some people aren't.
What I really like to recommend is if you're not going to pay that balance off, but the minimum payment might be $30 a month, like you said. If you're paid bi-weekly, $15 per paycheck. Just have it auto billed.
Yeah.
And it's your credit card's minimum is paid, and then if you have extra at the end of the month after all the rest of the bills are paid, great, pay a little extra on that balance.
Yeah, so that's a great one. Every bank has that. Set it, forget it.
Absolutely.
Yeah, that's great. Okay, perfect. Okay, so we talked about some good financial habits. Rebuilding the credit takes patience, but it doesn't take time. Wrecking your credit. You can spend years fixing it, but in a month it could be gone if you screw it up. Correct?
Yeah. It's amazing.
Yeah.
The point system is a little bit.
It's not exact. Yeah. So you could lose a point here and there in a month, but it could take you 6 months to get those few points back.
Right.
Yeah.
So in a very general sense, for every month that all your creditors are paid as agreed, you make approximately 8 points.
Okay.
However, if you are late on a payment, it is a 40-point deduction. If you go over your limit, so if the limit on your visa is $2,000 and you go to that $2,001 for a day, it's minus 20 points.
Oh, so know your limit, stay within it, right?
Right.
There we go.
Exactly.
Okay. So incorrect information on your credit report. How do you fix that?
There is a painful process that is described on each credit or bureau agency's website.
Yeah.
They only accept communication from the consumer through fax.
Wow.
So there is a template you fill out. You need to hit that template exactly.
Okay.
You send in your ID or with your proof, and they usually update fairly quickly.
So only fax or mail, I'm guessing, maybe?
Oh, quite likely.
Okay, got no emails though.
No emails.
Okay.
I wouldn't necessarily trust the mail system, particularly with my social insurance number, because you are also sending proof. I like to also send a copy of the credit bureau to show where the mistake is. Plus you send ID and then the proof that it's either been resolved or an error.
Yeah, so I guess in mail, if someone got that by mistake, they're going to get your SIN number, your ID where you live, your date of birth, so...
Everything that
you need.
A scammer would need to ruin you further.
Okay, so fax is a good idea for once, folks. That's what we're saying right there. So we're talking about making all your payments on time. Make sure, even if it's minimal credit, it's going to fix things as well. So we talked about, this is kind of interesting here, right? So we talked about what is a good credit score, what is a bad credit score, and we looked at, so an excellent score, 760 to 900.
The scoring system that I would be looking for and use with qualifying for mortgages is we do like to see a minimum of 600 to 620, depending how much of a down payment that you have.
600, 620 for minimal threshold for a mortgage.
For minimum, the best of the best. So there's no fees. You're getting the best rates.
So is that an A lender? Sorry.
Yes, correct.
Okay. Yeah, and A lender. Give us a description of that is too, sorry.
It's a lender where you fit the box. I can confirm your income, you have good credit, you're getting the best of the best. So the best rates available in the market, plus there's no fees. So when I describe an A lender where a client would fit the box in terms of confirming income and credit, the client would then qualify for the best rates in the market and not pay additional lender or broker fees.
Okay.
There would still be legal fees and
there's still legal fees and all that stuff, but just generally getting approved for an ordinary mortgage, good rates, good payments, good terms.
Correct.
You want that 620 and above.
Yes.
Okay, cool.
680 and up is then considered excellent. There is a bit of a threshold now with some lenders that they like to see the higher or the excellent credit scores if you want to refinance. Okay. So again, it's just to get you into that best of the best box. There are still B lenders out there that make the exception for credit blemishes.
Yeah. Okay.
But it's slightly more expensive money.
Okay, and then so when you got an excellent score of like 760, 900, what benefits that for somebody?
Anything over 600, you're all in the same pool.
Is it?
Yes.
Okay, perfect. And then, so let's talk about the poor credit and very poor, right? So anything 620 and under, I guess we're considering poor.
Yes.
All in the same pool for the most part.
Yes.
How long would it take someone if they were, like, obviously we're not going to hold you to this, but on average, what would it take someone to get from the poor to the good?
If you consider 8 points a month for paying your creditors as agreed, that's a great starting line.
Yeah.
However, if there's something reporting improperly to your bureau, as soon as it's fixed, they sometimes back credit you for all those points.
Oh.
So if you can prove that a year ago that collections was paid, you'll notice a significant jump. I find this quite often with post-bankrupt or post proposals that have been discharged. A lot of those counts continue to report improperly. So once we get that fixed up, it's amazing what I've seen 100-point increases. The last one I did was 130-point increase.
Overnight.
After
you faxed it.
Correct.
Yeah. Okay. Perfect. Okay. Awesome. And then we talked about that. We talked TransUnion. So let's, I find a lot of times the credit issues happen with people when they're young. They don't know better, right? They don't see what's the harm. So for anyone young, just get out of high school, just starting college, what do you recommend to them to keep themselves out of the bad credit sandbox, let's call it?
Be incredibly careful about what installment loans you sign up for.
Yeah.
It's quite often the car payments that really set people back because it's very tough to get out of those. If you think, okay, I have this great job coming right out of school, I can afford that $700 car payment a month. Great, right now you might. But what about next year when you buy a house? Maybe your life changes, there's a wife, there's a baby on the way.
Yeah.
It can on a monthly basis really impact a person, and it's tough to get out of.
Yeah.
So it's I'm not saying, go pay cash for everything necessarily, but be very careful with what commitment you're making financially.
So really, try to think about it ahead of time when making these purchases as a young person and racking up credit cards and doing these things. A lot of times you don't need the stuff you're getting probably.
Correct. Or when you're stretching that car loan over 7 years, your life's going to change significantly over those 7 years.
Yeah,
you might need that buying power available.
Especially when you're so young, someone might meet someone, have a child, buy a house, like you said, might get a job transfer, might be laid off. Like, there's so many different variables that people never really count for, like how am I getting out for how I get in kind of thing, I guess, for the most part. So in the grand scheme of things, it's tell people stop buying stupid shit. Really? Like, would that not sum up most of the credit problems you say?
Niceties versus necessities.
Yes, there's that needs and wants list. So we get it. Some people, life situations, just it doesn't matter sometimes in the sense where they can't help the situation they're in. But I'd say most of the part, it's people, like you said, signing up for those payments, doing those things. If you don't need it, don't get it. Okay.
Correct.
Yeah.
Correct. It's always the unforeseen. It's the divorces, the injuries. It's the unforeseen changes. So when you are having an upswing in life, great job, everything's going great, you might try to max everything out and set your payments quite high. Yeah. It's better to set them a little bit lower and then pay extra if you can.
So is there anything else that we need to cover that we haven't covered really yet? We talked about how to fix your credit, how to keep your credit good, how to, some practices, best practices to keep yourself out of that bad credit sandbox, we'll call it. So let's talk a little bit about bankruptcies and proposals.
Perfect.
What are people's steps there to get forward?
So, there are some life events that just force you into these situations where, a bankruptcy or proposal is necessary. It doesn't mean your life is over.
Okay.
You might feel a little bit restricted for a little bit, but at the same time, all your debts are paid. So you just learn how to work off a cash diet. Having said that, you do need to reestablish your credit.
Okay.
So think of your discharge date as you're reborn. That's your new birth date.
Your credit rebirth.
Yeah, absolutely. So the lenders are going to start to judge based on your history built post-discharge. So, they want to believe that it was a one-time life event. There's nothing you could have done to avoid it. That's why the bankruptcy or proposal happened. So post-discharge, you just want to show them that, yes, it is not a habit I've built. I'm not in the habit of overspending and not being able to repay. So you need to get those credit cards back open.
Okay.
I'm not saying carry a balance from month to month. However, you do need them open, showing it's available and you are able to use it appropriately. Having said all that, that's what you need to do to reestablish. But please have a proper bureau pulled right after discharge. Number one, you want to make sure that discharge date is showing, but also all the account history that was included in either that bankruptcy or proposal. It happens all the time that these creditors, once included, they don't report the final activity.
Oh,
and that does continue to hurt you because it doesn't show that there's been a resolve.
So somebody will be discharged and there might be a creditor they're reporting still from the bankruptcy.
Happens all the time.
So that would still be the person's score just wouldn't.
It continues to eat away.
Okay, wow.
Absolutely. Even though you're doing your best to rebuild, your credit score is still being weighed down.
Okay.
Another cool, really great tool that is available is if you do own your home and there's equity available, we can actually access the equity to pay off your proposal early. So if you sign for a 3 or 5 year, proposal, you need to make those payments all that time, reaching towards your discharge date. So if your new life isn't starting until after discharge, why don't we haul that discharge date back to today and pay it off using your equity?
Oh, great.
It's fantastic.
So that's some definitely for stuff to look at. What else do we got for people? So credit cards, don't keep a balance, get something, 1 or 2 of them, rebuild. What are some great, easy financing options for people after bankruptcy that you see from your experience, like a car loan or what are some little things that they could do to rebuild that credit?
Car loans are a little bit tough post-discharge because you're still going to be pretty heavily reprimanded from the companies. Yeah. So watch those interest rates because they're quite high. But what I do recommend is Capital One is great for reestablishing.
Yep. Okay.
You have to be incredibly careful with them because they're lovely at what they do, which is reestablish your credit. But if you are 30 seconds late because you sneezed and just missed hitting the button to send payment, they will report you. And showing even 1, 2 missed payments post-discharge, you're kind of sunk.
Forever or
Not
for
forever,
a year?
A few years.
So you're saying something that someone does 1 month, after that can send it back years?
Yes. So think of your discharge date as you are forgiven, but there's no room for error going forward until that bankruptcy's off your bureau.
Okay, perfect. Okay. Any other tips for bankruptcy?
I have a list of other credit grantors that are willing to start with. Be very careful with who you apply to, because some are more understanding than others, and you don't want to willy-nilly request credit because each credit application you fill out costs you 3 points.
So every time I apply for something, like a car loan, a credit card, cell phones, furniture, that's going to hurt you.
Yes.
Okay, good to know. A lot of people don't know that.
Is it worth your 3 points when you're making 8 per month? Just always consider that.
And someone, maybe if they were looking to get a mortgage and need some help, they could reach out to you and you could send them a list.
Oh, absolutely.
Okay, awesome. Yes. And we'll have Erin's contact info in the description for anyone that needs it as well, so they could reach out to you for that. So we're not. So imagine we'd be here for a while reading off the list of everything and all their contact info and that. So I was also looking at then how some things report, right? So I saw that I pulled this list online, and I don't know if it's true or not. So let's talk about it really quick. Make sure I got all the notes here. But so 4 years or fewer, consumer proposal or liens with TransUnion Canada. Who's TransUnion Canada? That's a credit bureau, right?
Yes, TransUnion.
Okay.
Yeah.
And then for 6 years, credit cards, lines of credits, loans, secure loans backed by an asset, non-efficient funds, closed checking or savings account due to fraud, TransCanada, legal judgments, bankruptcy, debt management. So all those things will stay on your credit for 6 years.
Yes.
Wow.
They're
okay.
just part of your history, though.
Yeah.
So as long as there's some sort of resolution to each of these things, it doesn't hurt you. It's just part of your history.
Okay, perfect. And then 10 years plus, multiple bankruptcies. So what's that mean?
So if you file for bankruptcy, say back in 2010,
Yeah.
you know, maybe you had a business fail or a marriage fail, you know, you claim bankruptcy,
Yeah.
you pay your dues for the 9 or 24 months, and then you're
Yeah.
out in discharge. You start to rebuild your life.
Okay.
Should another life event occur and you file a second bankruptcy in Canada, then both bankruptcies kind of come back to haunt you. They were both report to the Bureau for 14 years.
Oh, 14 years.
Yes.
Yeah, so that's if like a second one
Yes.
would go on there as well.
Yeah.
Okay, great. Okay. So any other tips, tricks, any recommendations you can give us for credit, what to watch for?
Really just watch that rule of twos.
Yeah.
You want to keep something open and reporting at all times. Obviously, student loans, car loans, they're installment loans. So you pay them off eventually, and then they are not part of your history anymore. So you really need to have that credit card open.
Okay.
That's good, strong, good history.
Yeah.
Always paid on time.
Okay, great. Well, thank you very much, because this is something I get a lot of questions about when people, like, they'll reach out to us, want to get a mortgage, can't get a mortgage. I'm always like, go get pre-approved first. And they go, my credit's bad, what do I do? And I'm like, well, I have some ideas, but I think you really need to talk to a specialist. So this gives people a good overview. By no means, again, it's not credit counseling.
Correct.
People should seek out to that. But so if someone wants to apply for a mortgage with you, you have A lenders, B lenders, C lenders, right? So some of these people that don't meet the mold of the good credit, you could still help them though, right?
Absolutely.
Yeah.
Number one, I would never just have a flat out no. I always send a client out with a plan of, do these things, come back, we'll figure it out. But also maybe we can just figure it out with existing equity or larger down payments.
Okay.
Just because one lender says no doesn't mean another lender won't accept whatever's going on.
We never talked about how's the equity work? How do we use equity to better out? Like, how do we make that work for us?
Oh, geez.
We totally almost skipped over that there.
Pull it and use it.
Okay, what do we got? Equity. How do we use it? How do we use it to benefit? What's it all about?
All right. It's currently our government allows us to access 80% of what our home is worth once we own it. So make the numbers really, really easy. If you own a home, it's worth $100,000. That means we can tap into $80,000, which is 80%. Minus your existing mortgage.
Okay, perfect. So once you own it, you can do total 80% loan to value.
Correct.
Okay.
Correct.
Yeah.
So with our market being as great as it is right now, appraisals are coming in to our favor.
Yeah.
There's a lot of equity that we can use and play with. There's a lot of different ways that it can really help and strengthen your financial portfolio.
So
It's
really,
just amazing.
like I heard Canadians have more equity in their houses now than they've ever had.
Correct.
Okay.
Correct. The government has instituted multiple, I call them tightening their purse strings. So we're not qualifying for quite as much money anymore.
Okay.
And then again, with this great market upswing, there's our equity.
So you can use it for debt repayment?
Yes.
So
my favorite.
To stop you from having to go into maybe that bankruptcy
Proposal.
Thank you. Or having your credit take a hit.
Correct.
Pay those off, close them, move on. So how would that look like, that process for somebody?
Correct. It's called a refinance.
Okay.
They're great these days because appraisals are coming in favorable. So if we access the equity, the lawyer pays all the debts off that we decide is appropriate at the time, and
the lawyer doesn't pay them off. They use the money that you refi to pay off the debts, right?
I don't know. Well,
I got a bunch of pissed off lawyers here saying like we do not pay people's debts for them, but yeah, we get it. Yeah.
Okay, excellent. And then not only does it help alleviate the interest rates, because a typical credit card is usually between 19 and 24%,
wow.
where your good mortgage rates are much closer or under 3 at this time. So we're dropping the interest rate on all these debts so you can pay them off faster. Your money's better allocated to principal versus paying only interest, essentially.
Yeah.
And then it also helps your credit because you're dropping your monthly output.
Yeah.
So if you consolidate a good chunk of debt, you can be dropping your monthly outgoing exponentially. If you think about it, $100,000 of mortgage money these days is costing about $480.
Wow. So I can almost imagine, because people, they have like this stigma against pulling out their house money sometimes, but really like $100,000 costs you $480.
Yes.
Imagine if you had $100,000 in furniture, cars, Visa, whatever. Like you're talking about like $4,000 a month in payments maybe with that interest rate.
Absolutely.
So like really it could be life changing for somebody in the sense where, okay, I bought all that stuff, I own it, let's pay it off.
Yes.
$480 a month.
Yes.
Doesn't mean go rack up new stuff.
Correct.
But start again before you have to go through that proposal, maybe that bankruptcy, have your house taken from you, and et cetera, right? So yeah.
Correct. And even when we are setting up the new refinance, sometimes we do stretch your mortgage back to 25 or 30 years. It's not that I'm suggesting you take that 30 years to pay it off.
Yeah.
With the amount that you're saving on a monthly basis, you can add that as prepayments to your mortgage to really cut down the time you have to pay.
Okay. So equity works in a great way to help save people in the sense where give them a fresh start on their debt. But how can we use equity to help us grow maybe our rental portfolio or other vacation properties or help kids out, stuff like that? What do you got there?
Absolutely.
Yeah.
Investment properties these days all require 20% down, which can sometimes be difficult to save.
Yeah.
So you can actually pull that from your principal residence that you're living in and be able to have that down payment for the next property. So you're not actually coming out of pocket for anything. Yet, with a rental property, ideally, your ROI is going to be high enough. So it's like you're buying yourself an income.
So so you're buying the rental property with zero money of your own pocket, essentially.
Yes.
In a sense, or a lot of people, I'll see people sometimes they'll use it for a secondary property. Right?
Yes.
So like if you've been in your house, let's say for 20, 30 years, it's paid off, it's worth $500,000, you could pull out $250,000 easily. It's only 50%, and buy that home in Florida or Arizona or whatever you want to do too.
That's a really great point you just made, because that is the easiest and cheapest way to finance any sort of property that doesn't necessarily fit the box.
Yeah.
So your smaller cottages, cottages maybe that don't have road access.
Yeah.
Or your out of country properties.
Yeah, this is really great information. I'm glad we were able to share this with people today, and hopefully they found it helpful. And it might help someone either trying to rebuild their credit, or maybe they're trying to use their equity to do something or buy that property as well. So for people that want more information from Erin from the Sherwood Mortgage Group, they can reach her phone number at 519-333-7499. But we'll also put all of her contact information in the description. If you want any of those lists, you want to talk shop or talk about your options. And I just want to say thanks again for Erin for coming on.
Thanks, Sean.
And watch for future episodes of the Ryan Report, where we're going to break down some more great information like this.
Awesome.
Thanks.